Hello, I'm Jon Najarian here at the New York Stock Exchange. And last year, about this time, I had the very good fortune to interview a real innovator in the ad space and how to use it more effectively. And that is, of course, Jeremy Burnett of RAD Intel. Jeremy, great to have you back here. So Jeremy, tell me how, in real life example, if you can, how RAD Intel would deliver what you promise for a customer.
The million-dollar question is, okay, so explain to me how RAD Intel is used in a creative campaign. So let's just talk about some of the clients that we work with and some of the problems that we've solved.
Sure.
Sweetgreen, one of our clients, had a problem with launching their products in the flyover states, everything in between Los Angeles and New York. And the question was, will people in Wisconsin eat a $20 salad? And that's a reasonable question. So the initial launch strategy was, we're going to take the salad, we're going to discount it, we're going to create these different incentives for people to come and see what we're all about. And when we did our research, we found that people actually were willing to pay the money for the $20 salad. The problem was people didn't know who they were in the flyover states. So you have an awareness problem versus a pricing problem. The strategy associated with a campaign, when you launch a campaign, if it's an awareness problem versus a pricing problem, are inherently two completely different strategies, right? So that's an example with Sweetgreen. An example with Roman Health, a medical supplements company for men's vitality, is they came to us with a program, and the name of the program was "He Still Got It," and the vibe was for dudes like us saying, "Hey, you still got your, you still got it, you still got it," and they came to us and they had this whole ornate program where creatives were going to be getting these boxes, and the boxes had all these different gifts in them, and it was all tailored towards a very specific demo, specifically men that were over the age of 45 years old. And what our technology told us was their audience had actually shifted over the last 2 years, and their user wasn't the 45-year-old guy who's worried about his quote-unquote libido. Their user was the 31, 32-year-old hustler who's waking up in the morning time, he works out, he wants a little bit of an edge in his business dealing, and he's looking to go really make it happen throughout the day. So if you think about it, that's a completely different human than you and I, right, John? So again, these are all just examples of the right strategy puts you in position to maximize the performance of the media dollars.
A better result for the brand.
Better result for the brand, and the person who wins is the user. Right? So when brands are speaking to their target customers in ways that are native, that feel comfortable with the target customer they're looking to attract, that customer is going to have a better experience with the brand. They're going to engage more deeply with the brand. So there's a real kind of circle of positivity happening here. The brands are putting better content out, they're making more ROI, and the users, the customer, they're having a better experience when they're seeing and consuming the content.
Give us a little bit about what the customer can expect, or at least what you guys have delivered so far as ROAS and some of the metrics that are used in the ad field.
Well, we've seen the value of creative intelligence that's tailored towards the content objective and the customer that you're putting that content in front of. I can't understate how important that is. We've seen 3.5x, 4 times improvement over previous campaigns. And it's interesting when you say ROAS, which stands for return on ad spend. The definition of ROAS a lot of times is defined by the brand team that are running the campaign. So a lot of times that's very obvious with respect to dollar in, dollar out, and sometimes it's different. It's metrics like share of voice, or it's metrics like engagement. So really we let the brand tell us what their definition of success is, and we build based off of those milestones that they say, this is why we want to get in front of this customer. This is what's important to us. And these are the milestones that we want to hit. We look at what they've done before in the past, and we show them. The beautiful thing about numbers is they really tell the story.
The return on ad spend is a really big thing, especially if you're doing 3 to 4 times what they could have expected with a competing non-AI model.
Yeah, there's the return on ad spend, 3 to 4x is a big number. But we don't go into a campaign and say, we're going to get 3 or 4x,
we're going to get you
right?
4x.
A lot of times a brand will come to us and it's a product launch, right? And there's different ways that you can use the technology. And that's really the thing that when we thought about, well, what is the definition of marketing or content creation? All of these different things mean different to whoever it is that's putting the media or content out there. Brands come to you and they want to spend $25 million on a product launch, Skechers during the Super Bowl, with
Right.
the slip-on shoes, right? They want to make sure that their money they're putting out there is going to be well spent. They want to make sure that Tony Romo and Mr. T are the right people. They want to make sure that the messaging that Tony Romo and Mr. T are putting out into the ether is the right messaging. So you can really think about it in several different contexts, but the most important thing is I always go back to this. Good strategy means you have a chance to maximize the dollars that you're willing to spend on the campaign.
So, Jeremy, 1,600% valuation growth, $40 million raised by RAD Intel. I mean, those are pretty astonishing numbers, and it's not just the 7,000 individual investors that have basically endorsed your vision, but it's a lot of institutions as well.
I'd say one of the things we value most is the community of 7,000 investors that we have. We're proud that we've got kind of a balance of sophisticated money and everyday investors, accredited investors. We've got insiders from Google, Meta, Amazon, and YouTube are also investors.
Nice.
And then we also have just a lot of regular people that want to get in on something early. And look, I always kind of go back to this, traction tells the story. And there's lots of reasons why we do the things that we do with respect to raising money through the crowd. But the most important part about why we've been successful is, number one, it's a commitment to transparency. The 1,600% valuation growth over 4 years is special, but that only happens because the traction is the trigger that warrants the valuation growth. So as we continue to grow, it's a machine that continues to feed on itself. Client wins, renewals with Hasbro. We're going on our second year now with Omnicom. As these things continue to materialize and take shape, we are in position not just to continue growing, but to create immense shareholder value for the people that are supporting us today.
Well, and speaking of roses, give me your year-over-year numbers as far as that revenue number, because that's pretty astonishing.
So we're just going into we're at the beginning of Q2 now, and we've already more than doubled last year's sales contracts. So that's a big deal. And we also are in position to where the rest of this year just looks really, really good. So yeah, and on top of that, it's 127% revenue growth from 2023 to 2024.
Nice.
I just told you what our sales contracts have looked like going into Q2. So if you kind of just do some back of the napkin math, you can see that we're on a really, really good sales trajectory.
Yes, you are.
From an activation perspective, we talked about Omnicom, we talked about Hasbro and Sweetgreen and MGM. I'd say the word is more than getting out. We've got significant activations in the fashion space. We also have significant activations in the beauty space. And if you look at the differences between fashion and beauty, there's an interesting through line. There's lots of different types of people that like fashion brands for whatever the reason is they love the fashion brands. You love this Kangol hat.
I do.
Right? That's your thing.
That's
right?
my thing.
I personally love the way this sweater feels.
Yeah,
on me.
you
We're not
like,
going to
you
talk
like
about who
dark
it is,
sweaters,
right?
even
Right?
if it's Stephen Jobs-esque.
And if you talk about Glossier, for example, a beauty brand, lots of different types of audience segments use Glossier products for whatever the different reasons are. So if you say, well, what's the through line between fashion and beauty products, and then you have a company like Hasbro and a company like MGM, you start to see a picture as to why we're able to scale. The common denominator is all of these brands have a variety of different audience segments that use their products for a variety of different reasons. And being able to give these brands unbiased information as to what topics, categories, and interest your customers care most about today as it relates to the campaign objective that you're putting out to market, that's the reason why these brands are coming to us and we're scaling.
One of the things that RAD Intel is doing that I really fully support is the democratization of investors, those 7,000 investors that are already in, and the new investors that are coming in. Many of them could not participate in a traditional VC model, correct?
That's right. Yeah, so we talk about this all the time, and a part of the thing that we're proud of is everyday investors get to participate. Typically a deal like this is reserved for insiders, institutional money, venture capital money. And the thing about crowdfunding is, number one is because you are raising from everyday people alongside accredited investors. And we also have, we're one of the unique stories to where we also do have institutional money, but because there's a different level of scrutiny because the normal everyday investor is backing our company alongside a Fidelity or an Adobe, we have the same sort of SEC qualifications, auditing requirements, and financial hygiene that's needed in order to do that successfully. So these things are a part of the ethos here at RAD. And the beautiful thing about these customers and traction is it equates to a share price that's continuing to go up. And the everyday investor is getting to participate in this. And that has been the basis of everything we've done since day one.
How does an investor actually get to exit? They've made a prudent investment, and let's say RAD continues on this fabulous course. How do they get paid?
The most important thing when you're building a business is, number one, there's always inherent risk associated with investing into everything, whether it's an early stage startup, a startup that has all the different SEC qualifications and auditing and financial hygiene, a company like RAD, or even a publicly traded company. So that's the very first thing, is there's always some sort of a risk. The second thing is I'm a big believer of you're betting on team. So right now, between my co-founder and I, we have 5 exits between us. On our board of directors, our chairman is the former vice chair of Brookfield Asset Management. Somebody else on our board has purchased over 230 companies in the M&A space. So if you kind of just look at it from a leadership perspective, number one, we're capitalists. Number two is our interests are 100% aligned with our investor base. And number three is all of these things mean that the team, the jockeys that are on the horse, are the right team, right? So if you look and you do your research, you'll see that. The next question is, okay, is this team going to be able to take us to the promised land? Well, the promised land means...
Which might be right down there.
The promised land could be here, it could be across the street at
over
NASDAQ.
at the NASDAQ.
Yeah, I mean, it could mean several different things. So there's certainly a line to going public. Whether we decide to go public or not go public, it's going to always be based on market conditions, timing, and whatever the best situation is to create as much shareholder value as possible. So there's certainly M&A interest in RAD, and we're going to always think about it from a perspective of how do we create as much shareholder value. And all of these things are really exciting, but none of it matters unless we build a sustainable business with a product that people need to have.
All right, folks, if you're as excited about RAD Intel as I am, then make sure you're aware that by May 29th, the present offering at 60 cents a share will end on May 29th. So if you'd like to invest in the exciting vision that Jeremy and his team at RAD Intel have, go to invest.radintel.ai. That's invest.radintel.ai. Well, Jeremy, I'm excited about everything we talked about here today at the iconic New York Stock Exchange. I can't wait for the next bit of big news that I know is coming soon.
Appreciate it, John.
Thank you, sir.
Take care of yourself.
You as well.